Hey, Rebel Bankers, this is your host, Chris Noggle, and welcome back to the show. I hope you like my whole new look. Got the cowboy hat, good day, got the glasses, and that's because I got to show you a few things that are really important. I got to herd some cattle today, and I got to basically take that cattle that I herd, I got to show it to safety because things are coming down fast, and that's what we're going to talk about today. So this is going to be a solo episode, and I'm going to talk to you today about the stock market. And just so you all know, when you're watching this, this is right during the economic crash because of the COVID-19. If you're watching this later, just so you know, this isn't just relevant for what's happening now. This is relevant for everything as it pertains to the stock market. And I want you all to understand that. So I'm going to talk to you about the stock market. I'm going to talk to you about stock market patterns. And I'm going to talk to you about how you then can change you could take back control of your money, because this will show you exactly how to play different patterns in the markets in a very simple way. Everybody thinks the stock market is so complicated. They think the stock market involves, having to have advisors and having to have all this, crazy knowledge, which yes, you do need to have a lot of knowledge, but there are some simple, fundamental things that you can do and that you can understand about the stock market so that you then can make your own decisions and really get yourself ahead based on this chart that I did in the back. Now that looks like a busy chart. I've been doing other talks on this chart all morning long, but I'm going to dissect that. We're going to talk about some basic things that have to do with that chart. But we're really just going to talk about the patterns of the market so that you know exactly what to do with your money, how to do it, how to make solid decisions based on the past and what the market patterns are and how they work, because that's the thing. The stock market works in very rhythmic, predictable patterns. And if you understand them, you then can make better decisions. Now, I also did another episode for the Real Estate Money School, and it was called Market Patterns. You should watch that one because that one was before the market fallout. Now this is during the market fallout. And I want you to see the very similar patterns and exactly what happened. And I bet you any money, if you watch my first Market Patterns episode, you'll find that I predicted this happening. Now, I bet you wonder, how can I do that? How could I predict what just happened with the stock market? Well, it's simple. I understood the patterns and I understood the signs. And that's what we're going to talk about, is just simply patterns and signs, and you're making decisions based on that factual data. Now, am I going to wear these glasses the whole time? No, but I'm going to wear them up until I get into it, because eventually I want you to understand we need to take the rosy colored glasses off sometimes in our lives to understand what we really need to be doing. So for all of you joining, and you guys are probably, some of you are just starting your journey to becoming a Rebel Banker, and I honor you and I thank you for joining me on this episode of the Real Estate Money School. And on your journey to becoming a Rebel Banker, there's a couple things you need to do. Number one, you need to then start taking action on knowledge. Now, I know there's a lot of people out there that are seeking knowledge. You're on this episode because you want knowledge and you're looking for knowledge, but you also need to take action. And that action starts in a couple different ways. You could grab a copy of one of my 2 books. Mapping Out the Millionaire Mystery will teach you how to take back control of your money through a 200-year-old banking system. This book is phenomenal. Read this book and take action on this book, because a lot of people read books, but they don't take action on them books. Here's another great book, The Private Money Guide. If you need money for your deals, take action on the things in this book. Read the book and take action. That's how people do it. Successful people do 2 things very well. They invest their time and they invest their money. And the third thing, which isn't talked about much, is they take action on both of those things. And all of you need to do that. So you guys get started with that. And also, shameless plug, Money School TV, the brand new community that we just started. I'm going to do a real quick commercial because it's so vitally important. If you want to take back control of your money, if you want to learn exactly step by step by step what you need to do with your money, Money School TV is that. It is an ultimate resource. It is step-by-step guidance. It is 2 hours of live group coaching every single month. There's one-on-one strategy sessions that we do with everybody in there. And here's the best part. It's all money. It's all the time. And there's always new training relevant to what's happening in the world today and at that moment. And the best part is it's $19 a month or $190 a year. If you do $190 a year, you can basically add this book to your membership for $5. Just pay the shipping and we'll send you the book. So with that, let's jump right into market patterns. Let's talk a little bit about understanding what to do with money. The first thing you need to understand is the markets have and always will work in very predictable patterns. What do those patterns look like? Well, let's pull the chart in real quick because I want you to understand this. So you guys can see this chart here real quick. These patterns that I'm talking about are nothing more than the patterns of the ups and downs, right? So these are the ups and downs of the market. You've probably been through some of them in your life. Maybe you have, maybe you haven't. It doesn't really matter. But at this point in time, this is where the rosy colored glasses need to come off. This is where all the things that you've been taught your entire life about how money really works all goes away because you've been taught to give up control of your money, haven't you? That's primarily what you've done. You have been taught to give up control of your money most of your life. Putting money in 401ks, that's giving up control of your money. Depositing money at the bank and letting the bank loan our money out and make 400 to 1,300%. That's giving up control of our money. You see, everything we've done our whole lives has been about giving up control. It's time for you to take back control, and you can do that with some very simple rules and some simple patterns in the markets that will help you understand what to do. So if these are the patterns from 2008 to 2020, a lot of people ask me, Chris, how did you predict the 2020 market fallout? Well, it's simple. Patterns and signs. That's it. Those are the only two answers I can give you. I'm not some Mecca. I'm not some fortune teller. I just simply knew the market was going to go down. And I'm not the only one that knew this. There was a lot of people, the Ray Dalios, all the gurus out there, they all knew the market was going to go down too. Did we know exactly when? No. I got it right. I don't know how I got it so right, but I did because I predicted the market was going to go down 6 to 8 months after a lot of the webinars and the lives that I did in 2019. August of 2019, I said the markets are going to crash in 6 to 8 months. It's just insane. It's insane. And if you watch my other episodes, you'll see that I did that. But how did I know that? Because I know that the markets work in very rhythmic patterns. So this is 2008 here. This is 2020. It was 11 years in between. But the markets typically will correct every 7 to 10 years, okay? So we were already way overdue for a correction. But then what were some of the other reasons? So if you understand that the markets work in these patterns, not only do markets work in these patterns, individual stocks work in similar patterns. So let's just say this is stocks here. Sorry about all the scribbling. It doesn't really matter because I don't really need you to understand a whole lot about what's going on this page. I want you to understand a couple things. You've been taught to believe that you should buy and hold for the long haul, which if you do that over 20 years, the chance of you losing money is slim, okay? But if you can hold out 20 years, I'm going to give you the golden medal because not many people can. Because what happens is when a market does crash, when it goes down, just like 2008 and 9, we fall, right? 20% drops. Well, we hit 20% drops here in this market too. Then it hits 30% drop. Then it goes down 40. You see, fear starts kicking in at about 20%, maybe not even 20. And then reality kicks in around 30 or 40%. What is reality? Well, reality is the reason that most people can't make it to do the buy and hold. The reality is, do I keep my money in the markets, in the stock market, or do I pay my mortgage? Do I keep my money in the stock market, or do I pay my kids' college tuition? Do I keep money in the market, or do I keep food on the table? That's the reality, folks. And that's the reason that every single one of these market drops we have, I don't care if it's 2000s, the early 2000s, the tech crash. I don't care if it's 2008. I don't care if it's 2020. I don't care if it's, 2027, which is about where I'd say the next crash will be. It doesn't matter where it's at. It's always the same. It always looks like this. The reality is the reason why so many people are on the financial hamster wheel. You don't need to be. You don't need to ride the financial roller coaster. You don't need to ride the financial hamster wheel because if you know some very simple things, you then will know exactly how to make your decisions. And the first thing you need to understand is the markets work in 7 to 10 year patterns. Every one of these patterns, how many years? From 2000 to 2008, okay? 7 to 8 years. From that tech crash, 7 to 8 years. From 2008 to 2020, That was 11 years. That was too long, right? It was about an 11-year cycle. And, you know, on some of you are like, well, no, Chris, that's 12 years. Yes, but I'm going from 2009. Okay, I'm just, same thing here, 7 to 8. So we'll just say 11 to 12 years. And then where's this next pattern going to be? Well, I don't know. Good guess would be 2027 to 2028. So again, if you just knew that, couldn't you make your trades and make your decisions on how you invest in the market pretty accurately? Well, you very much could. But see, here's the problem. It's called greed. Last year, I pulled my money out of the market. And I gave up on 10 to 15% of the increase. So I got out here and I gave up 10 to 15% of upside. But when the market went down, just a few short months, like a month ago, really is really when it kicked in. I mean, I'm actually a little over a month ago. It took one day to lose 10 to 15%. One day. Let's be fair. If you were in a diversified portfolio, it took you about 2 days to lose what would have taken you in a year and a half to gain. And it took you only about a month to lose what you took 11 years to gain. So markets go down faster than they go up. You can see these steep, mellow, steep, mellow. It took 11 years. It took 11 years right here from 2008. This was 11 years to make those returns. And it took 1 to 2 months to lose everything else right here. This is what happened. But then, why would people stay in? If you knew that, right? That just seems logical. You just count, right? You just count the amount of years. So now we just started 2020. 2020, so really we just start counting. We know that we've got from 2020 to about 2027 to 2028. And we can make decisions in that moment. We don't have to decide now, but we know that this is our buy point right now, where the markets are going down. See all the red right here? This is where we buy. We buy when it goes down. We buy here. But we're going to have to buy into fear. We're going to have to understand that there's going to be a lot of fear, and we have to buy into that. Easier said than done. Well, right now, buying is what you should be doing. You should be buying at these levels. And as the markets fall, you should keep buying. So what else do you need to understand about market patterns? Well, it's simple. Market patterns, we already know that the time pattern, but what are the things that you really want to look at? Well, before this, what was I looking at? Well, there was signs everywhere. You know that song, signs, signs, everywhere there's signs. That's all I had to do. Just follow the signs. They were everywhere and they were available to each and every single one of you. But so many people just turn the blind eye. So many people are wearing the rosy colored glasses. And until the rosy colored glasses come off, you can't make decisions for yourself. You just listen to everybody else. So until you start deciding who and what you want your financial future to look like and what you want your money to do, you need to then start taking the rosy colored glasses off and understanding it's this simple, folks. They just make it complicated because they don't want you to understand that you don't need them, but you really don't. And you know who I'm talking about. I'm talking about all the, I'm not even going to go into that, but I'm talking about Wall Street. You don't need the Wall Street gurus. You don't need the stockbrokers. You don't need the financial advisors. Now, they help. And I'm not saying you shouldn't have them, but you can make your decisions based on this. So now here we are, 2020 right now. We're in this crash. Just last week, we had an increase. We had what we would call a speculation bump. Okay, we had what they call a breakout. Right here. If this was an individual stock, stocks trade within patterns. Okay, rhythmic patterns based on what we would call support and resistance. But you don't need to really get too into this. Support is like the ceiling in your house, and resistance is like the floor. So if this is the support and resistance, this is the ceiling of your house, and this is the floor of your house. Now imagine in your house, you bring a trampoline in. Okay, you got your trampoline, and what you're going to do is you're going to start bouncing on this trampoline. And this trampoline, every time you bounce on it, it's going to basically make you hit the ceiling with your head. So put a helmet on. And every time you just bounce and you hit it and you hit it and you hit it and you hit it and you hit it. Eventually, if you hit that ceiling enough times, you'll break through the ceiling. You will. Your head will hurt. Your helmet will crack, but you'll break through. Well, stocks do the same thing. You see here, all these little circles. Every time we bounce in these patterns, we look at any stock that you ever do. I don't care what stock it is. I don't care if it's Disney. I don't care if it's Apple. I don't care if it's the S&P 500, the Dow Jones, anything. An index, a stock, they all trade the same way. And all I do is I wait for these bounces. Boom, boom, boom. Usually when I get 3, I know that there's either going to be a breakout, okay, like we had just last week, and that's where the stock breaks through the ceiling. That's you bouncing on that trampoline enough times where you actually hit the ceiling and your head breaks through it. Great. Now, the question is, when you get to that next level, which is essentially the floor from before, when you break through that, are you going to continue to try to keep going up and break through the next ceiling? Or are you going to be like, I don't really like this floor. I like the last floor, and you're going to go back down. Well, a lot of times when it breaks through like this, after that, there's a pullback and the market falls back down to its former level, which is this level here. Now, what also happens is eventually, sometimes you're going to break through, you're going to go through the floor, okay? So that would be where your floor gets weak, right? You keep bouncing on this trampoline and you keep hitting the floor. Eventually your floor gets weak and you fall through the floor to the prior floor. So that's what you're going to see this week. You're going to see the markets contract and you're going to see them go down. It's just a floor and a ceiling, folks. And if you understand how to do that, then you can start really learning how to trade individual stocks. But forget about that. I just want you to understand the patterns of the market. So right now, why do I truly understand that the markets aren't going to keep going up? There's a ton of people right now that think that the markets are just going to keep going up because we had this little breakout last week. Well, the reason it's not going to go up is facts. Look around. Signs everywhere. There's signs. I'm not a good singer, but you know that song. Here's the signs. This is the reality. This is what's really happening out there. Number one, Main Street is closed. Have you driven outside? If you're watching this during the economic crash of 2020, the COVID-19 pandemic, you're realizing that there's not a whole lot of businesses open right now. Main Street, as we know it, is closed, which means if Main Street is closed, there's an awful lot of people unemployed. The unemployment numbers are in the millions, and they're going higher and higher every single day. So if Main Street remains closed and unemployment numbers keep going up, that means America is not back to work. These are facts, folks. These are the facts you look at. In any period, I don't care if you looked at 2008, you could have said banks are failing. You could have said people are losing their houses. You could have said, money's drying up. We can't get money. They're freezing lines of credit. All those signs everywhere. There's signs. Just follow the signs. Okay? Then down here, bankruptcies will be next. Businesses will go out of business and go bankrupt. My prediction, 60%. I know you're not going to like to hear this, but my prediction is 60% of small businesses in the United States go out of business because of what's happening in 2020. The stimulus checks. Yes, the government is giving stimulus, okay? $1,200 to $2,500, give or take, whatever that is. How long can someone make it on $1,200? How long can a family make it on $2,500? When that money dries up, what happens? Problems, okay? Businesses, they had the PPP, the payroll protection programs, okay? That gives people 2.5% or 2.5 times their payroll. That means that businesses, which now have been out of business for almost 2 months, when they finally get their checks, if they get their checks, they're just covering what happened in the past. Is that really going to result in them hiring a lot of people back? Maybe. Is it going to really fix the problem? No. Folks, these are the signs. These are the signs right there. And based on these signs, you can make a very, very solid conclusion that the markets have to go down, because until all these things start to turn around, we are going to go down. Now, what's the good news? Well, the good news is if this is 2020, we're about right here. Okay, we're not even halfway through this. This could be a long time down. I don't even know how far down it could go. Could it go that far? Could it go that far? You can't predict the market. You can't time the market. But it doesn't matter. If this is where we're at right here, what decisions are you making right now? Well, the decisions should be based on facts and based on your risk tolerances. Do you want to stay in the markets? Do you want to ride it out? Can you afford to go in for the long hold? Well, if you can, great. If you can't, well, maybe not such a bad thing to get out while you still have some gains. Not such a bad thing to get out when you're only down 20% if you can't accept 40% as a loss. These are the things you need to look at, because this is probably where it's going to go. And eventually it will come back up, and we will all then be all happy. And very quickly, after about 11 years, as you know, we all seem to forget what actually happened. Folks, I did this drawing just to help you understand broad-based market patterns, individual stock patterns called support and resistance, or the ceiling and the floor. Remember the trampoline, and then the long hold. Okay, buy and hold. This is the buy and hold. If you can do it, chances are over a long period of time you will make money. But if you can't, you have to pick your exit point. buy low, sell high, and don't lose money. That's what Warren Buffett says, and that's what you need to do. And this is how you do it. So folks, I hope that this knowledge was useful for you. And I hope that you take some action on this knowledge, because what did I say earlier? On your journey to becoming a rebel banker, it's great that you get knowledge, but you have to apply that knowledge. You have to apply that knowledge in a way that gets you results. And the other thing you need to do, I started this with the glasses on, and I'm going to finish. You need to take the glasses off. You need to take the rosy colored glasses off, and you need to really look at what's going on around you. And what's going on around you are things that you need to make decisions on and things that you need to be in control of. And if you're not in control of your money, then you need to start changing that. And now is the time. My watch says now. My bracelet says the time is now. The time is now for you to take back control of your money. And the time is now for you to become a rebel banker. And on your journey to becoming a rebel banker, grab a copy of one of my books, The Private Money Guide, Mapping Out the Millionaire Mystery. Sign up for Money School TV, MSTV. It's the movement. It's where all this financial knowledge is. If you liked what you saw here, imagine having that every single day. Individual trainings, individual one-on-one coaching, individual group coaching with the experts, my network, my mentors, the people that I work with. Imagine having access to them. That's what it is. So take action if you guys want to be ahead of the curve. So thank you all for joining me for another episode of the Real Estate Money School. We'll see you guys on the next episode.